What's going on, guys? Welcome back to BetterBull BetterTraders program. My name is Sam. I'm with my partner Luca today. We're going to be going over a video on support and resistance that helps you find the most effective entries and exits when you're intraday day trading.
Here we are going to go over a day trade that we Tesla today. We're going to just go over exit points. I personally love this trade from open because over the last few weeks, Tesla has shown very strong reversals after a gap up or gap down in the morning. But early on Friday, we were trying to exit swing trades that we made overnight, so we were a little bit late. But after we saw it fall from that 600 support or that 600 resistance, we just were waiting for a nice little uptick to get in. And like you can see on that arrow on the at the 580 mark around.
Yeah, so we're working on this Thinkorswim platform. We went over a video on this the other day. So as Luca was saying, we started this from the open. We were a little late due to closing out some trades that we had the previous day. In pre-market trading and after hours futures, we saw that Tesla held up on this right about 604 line, a little plus or minus some change. So we were looking at this as it crossed the 605, and we saw it start to falter as we were finishing up. And it was about here when we started to pull up our orders. So we were kind of chasing, but we wanted to find the exact right uptick because we knew that Tesla had this downtrend coming.
Yeah, and so we were chasing, but we waited and it showed some support off 580, upticked a little bit, contracts went down, we got in. And we instantly went up, went down a little bit, but what we were really looking for is we really wanted to go down and test that 550. And if you can see on our chart, 550 isn't actually a support level, but when you're thinking about the psychological aspect of trading, 550 is just a big number. And people think that that's some huge support, when in reality, 553 is the real support from previous days.
Yeah,
but
so
we were looking for this 550 drop because, I mean, you get in a little bit over 580, you're on a day trade. Fine.
Absolutely. So we were looking at this 553 point, and the way we derived this was actually from previous days of trading. You can see right here, if I can zoom out a little bit, that Tesla actually flirted around this 553 range all day. It traded sideways right around here on 553, and it traded sideways right here on 553. So we were looking for that level as a support for Tesla. And as you can see, it actually held up perfectly on the 553. Not only once, but then it held up twice as later on in the day it jumped up. So the key points to support and resistance are when you see something hold up on a key resistance line or a key support line, it's definitely a time to watch the stock, see if it trades sideways or see how it reacts to that level. If Tesla right here was to go down to 553 and go right through it, there's nothing holding it until the next support level. So as we entered on our contracts here up around 82, we were looking there as we saw this point right here. So this was the time frame of our actual trade right here. So we pulled this up, we saw Tesla come up. Obviously, when you're looking at this, you want to see if this can create a lower high or a higher low. So right here, it made a lower high and it continued to fall down.
Yeah, and so we were obviously keeping in mind that 553 support from previous days because it traded sideways and consolidated at that support level so many times over the past 2 days that was a huge support level. So right here at around like 955, saw it kind of fight it and bounce off. We got nervous, so we ended up exiting and took our profits because the worst thing would be to lose money after you're up money. But as you can see, it bounced off that huge support and then trades sideways above it. And then all of a sudden, a mass sell-off, and there was absolutely no support until 500.
Yeah, so this is just an example of a trade, in this small span that we had here, this was about 20 to 25% gains on the certain contract that I was doing, which was a relatively decent gain, and you can't complain about that. In retrospect, had we held longer, would have been a better trade. But in terms of the principles of support and resistance, as it goes back up and starts creating these higher highs, it only makes sense to get out. And that's what it all comes down to, is the support and resistance levels that will make your day trades more confident, and you'll have the ability to know when to get in and when to get out. Had we been day trading Tesla all day, we would have saw that it broke this 553 range, came back up, and then got rejected by the 553 range, and that's crucial. By here, I would have assumed we probably would have put a lot of money back into Tesla and followed it all the way down, because there had been not any more support or resistance breaks up until that point.
Yeah, for sure. And, you know, it definitely sucks watching your contract. But, you know, when you use these techniques of support and resistance, if you play it the right way, you're really guaranteeing yourself 20 to 30% gains regardless. So, I mean, you at some point in day trading, you just need to accept, like, I'm happy with what I've gained, and profits are profits. You always need to remember.
Yeah, so as you can see, you know, we're using Tesla as an example for our support and resistance trading, but you can also look at, you know, any stock that you pull up. SPY right here, we're looking at this. As you're going here, SPY goes down, comes back up, goes down again, and as you can see right here, it finds a base, comes up, and then creates a higher high. So that's relatively bullish in the short term. However, right now, as we're recording this video, we are now in a bear market. So what typically happens is a stock will make a higher high, and then it'll continue to falter and fall again. So right here, as you can see, it comes down, breaks this support level completely, falls, then comes back up to it, consolidates for a moment, but then can't find a way back up, and it falls again. And that's typically how this happens in a bear market. And as we go into more videos, we're gonna show you guys how to identify these huge breakouts. You know, support and resistance is just a big key to this. And as you're trading on a support and resistance graph, you'll actually see as soon as it breaks a certain level, so many back-to-back red or green candles will continue after that. And that's where you make your big money, and that's where you can really capitalize on options trading.
My favorite thing to use support side. So I love to watch when a stock can show me that it can break the support level, and I actually love it even more when it can bounce back up, try to cross that now resistance because it's below the support, and when it fails that resistance, it's extremely bullish or bearish, because you just crossed down on a support that was supposed to be. You're showing that you can't even break a, so there's nowhere but down to go from there.
Yeah, that's right. So we're actually going to be doing some live day trading videos soon that we can actually show this to you in live time. You know, it's always easy to look at something in retrospect as it hits a support level and then breaks. But as you're trading, there's a lot more nerves that goes into it. You know, the price action can be tricky to look at. Thank you guys for watching this one. We're going to be going into more soon. Please head on over to our YouTube channel, like, subscribe, follow us on Instagram, and go head on over and join our Discord today to learn more about our stock trading program.